Hello everyone, this is the pre-market report video for today, 3rd July 2023 in the Indian stock market in terms of Nifty and Bank Nifty. Last Friday, before the US market opening, around 8:30 am Eastern Time, US Department of Commerce released the various PC inflation such as core PC inflation, whole PC inflation, month-on-month basis and year-on-year basis, etc. As most of you know, PC inflation is the most preferred inflation gauge for the Fed people. I mean, for taking the interest rate decision, they always look at the PC inflation rather than the normal one. Regarding the data, I don't want to go in detail about all the data, rather than I will explain some. For example, year-on-year basis, PC inflation from 4.3% in April month, it dropped to 3.8% in May. And it was less than that of the analyst prediction. That is the first positive. Then the second positive was month-on-month data. I mean, for May month, it came as just 0.1% increase against expectation of 0.5% increase. The whole overall data is very positive, there is no doubt about it. So, all three US major index, Dow Jones, S&P 500 and Nasdaq opened and closed overwhelmingly positive. Just for info, last Friday was the end of first half year 2023. Thus, so far this first half year, Nasdaq increased 31.7%. It is the biggest increase in the last 40 years. In case of S&P 500, it increased near 16%, whereas Dow Jones just 3.8%. So, the overall scenario was very positive. However, I am feeling little conscious since PC inflation dropped so much, but the core PC inflation dropped not much. I mean, the difference is if we take the food inflation and energy inflation from the PC inflation, then it is core PC inflation. For May month, core PC inflation for year-on-year basis came as 4.6% against 4.7% a month ago. It means the whole drop comes from either fuel or food. My bet is on fuel, which was determined by international demand. And all this was evident in the CME Fed Watch tool, as it now predicts that over 85% chance that Fed will increase the interest rate in the upcoming FOMC meeting in July 26th. But market ignored all and closed its eyes to all the negativity. Anyway, at the end of last Friday, Dow Jones increased by 0.84%, S&P 500 up by 1.23% and Nasdaq was rallied by 1.45%, whereas VIX was roughly in the same place around 13.5. However, 10-year bond yield increased to 3.84%, which is not good. Regarding oil, on Saturday, it increased near 1% due to the decline in US inventory. Brent crude oil was closed at $75 per barrel and WTI crude oil was closed at $70.5 per barrel. Then regarding Indian ADR, it's not overwhelmingly positive like US market but in line with Indian market. So overall it was positive. I mean, except ICICI Bank which decreased marginally, all others such as HDFC Bank, Infosys and Wipro increased around 0.4 to over 1%. ICICI Bank was negative since its board decided to merge with ICICI Securities. Just for info, in most of the case, remember this, always most of the time, the smaller company that merging into the big entity always gets beneficial and the bigger entity, most of the case, it faces the negative consequences. Moving on, about SGX Nifty on its last trading day, Saturday morning it closed at 17,364 with roughly 175 points higher compared to that of the value when the spot market closed on Friday. But with premium and equating with future market, I am expecting and it's kind of indicating 50 to 70 points gap up opening. So this is what happened last Friday and Saturday in global market. Now coming to India related info. There were various important macros. I mean, lot of important macros was released during the weekend, including Friday aftermarket hours, such as fiscal deficit, forex reserve, infrastructure growth rate, GST collection, banks credit and deposit growth rate. I know it's a lot of data. I don't want to bore you guys by explaining all. So I like to highlight about just infrastructure and fiscal deficit. First, infrastructure output. On year-on-year basis, it just increased by 4.3%, which was below than that of the expectation 4.6%. However, it's the highest since February, mainly driven by a surge in cement, steel and fertilizer output. 5 out of the 8 sectors posted year-on-year output growth in May. Then regarding the fiscal deficit, in the first 2 months, government spent only 11% of its target deficit, which is less compared to the last year same time. Thus, it's a positive macro. Just for info, the guidance that Indian government gave was that they will target 5.9% of GDP for FY 2024. Moving on, second item, Indian Meteorological Department announced that on Sunday, India's annual monsoon covered the entire country 6 days earlier than usual, but the total rainfall so far it's 10% below average this season. So it's really important to keep an eye out for monsoon and its development. Hopefully it won't be deficient that much. About auto sales, it's more of a mixed. Maruti Suzuki increased 2%, but Tata Motors, Escorts and Hero MotoCorp, all those sales were dropped. Here, there is another news about Hero Motors. Effective from July 3, 2023, they increased the ex-showroom price by around 1.5%. Finally, about Reliance, during weekend, they released the press statement that they started the oil production from their allocated new KG-D6 block. As a summary, global momentum is good as all three US market major index closed really positive and SS Nifty indicating the gap up opening of 50 to 70 points. In addition, Indian areas are also suggesting the positive opening. So, will it sustain today? Let's see. Then, about the things to look out. First, in the early morning, China's PMI data is scheduled. For the present scenario, that data is very important since that will show the Chinese manufacturing recovery status. And this will directly impact oil price and also the Indian steel price. Then during the market hours around 10:30 am, India's manufacturing PMI data. Then at 1:30 pm, Europe's manufacturing PMI data are due to release. Finally in the night, US manufacturing PMI data is scheduled to release. Coming to technical, in daily chart, both Nifty and Bank Nifty forms a long gap up bullish candle. In Nifty, for the first time, it opened above 19,000 and closed near 19,200 mark. Thus, it forms a higher bottom formation. Even on both weekly and monthly basis too, it forms a largest green candle and for the 14th consecutive week, it forms the higher top. If we see the last 3-4 weeks, 18,500 was defended every time and moved above 19,000 decisively on Friday. So the momentum indicators looking very strong. The RSI value showing a positive crossover on all time frames. Technically on daily charts, it's a breakout continuation formation. So the short term trend looks positive and thus there is a high chance that Nifty can go up towards to 19,500 level. Here 19,050 to 19,000 is the key level now to look for. If Nifty falls below, then people might try to exit the long position. In case of Bank Nifty, it also supported the rally as it hits the fresh all-time high 44,787. But in the end, it corrected little and formed a small green bullish candlestick on the daily chart. For the week, it was up by 2.6% and thus finally after 4 red candle, after 4-week consolidation, it forms a green bullish candle. Thus, on weekly chart, it has given a downwards consolidation breakout, suggesting an increase in optimism. Therefore, the short-term trend looks positive for Bank Nifty as well. Then, from option change in open interest, huge new put option open interest added between 19,000 to 19,100. And 19,100 got the new maximum nearby new put option added, followed by 19,000. So 19,100 is crucial. If it breaks, then 19,000 is the support we need to look out for. Then regarding overall options open interest data, 19,200 got the significant short straddle and the maximum nearby call option is at 19,500 and followed by 19,400. So 19,400 is the immediate resistance and 19,500 is the strong resistance. Then coming to Bank Nifty, based on overall options open interest data, significant short straddle were present at 44,500 and the next maximum put option is at 44,000. So 44,000 becomes the immediate support. Then the maximum call option open interest after 44,500 is at 45,000. Thus 45,000 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.